Well, it finally happened. The US government just threw a massive wrench into the world of e-commerce by suspending the de minimis rule, and it all kicks in on August 29th. For years, the era of tax-free, low-value imports allowed your business to rely on an $800 threshold to manage costs and keep shipping smooth. That advantage? It's gone. So let's break down what this policy earthquake means for your profit margins, and more importantly, how you can adapt and keep your business thriving. The problem. What just happened? So, what was the de minimis rule, and why is its suspension such a big deal? Think of it as the free pass for imports. It allowed shipments valued at $800 or less to enter the US without facing duties or a mountain of customs paperwork. It was created to make trade more efficient. Frankly, it cost the government more to process the paperwork than they'd ever collect in taxes on small items. But on July 30th, 2025, an executive order suddenly suspended this exemption for all countries, going into effect August 29th. This isn't just a small adjustment, it's a seismic shift in U.S. trade policy. It follows the earlier removal of this privilege for China and Hong Kong back in May, which was already a major shock to the system. The official reason given is to curb unfair trade, stop illicit goods like fentanyl, and level the playing field for American companies. But for thousands of e-commerce brands, dropshippers, and importers, it's an abrupt business bombshell dropped with only a 30-day warning. The risks. How this puts your business in danger. Let's not sugarcoat this. The end of de minimis poses some serious risks to your business, starting right with your bottom line. First, your costs are about to spike. Every single import that used to be duty-free, even that $10 gadget, will now get hit with tariffs, taxes, and fees. This will chew directly into your profit margins, especially if your business is built on affordable, high-volume products. Second, get ready for a logistical nightmare. You're now on the hook for full customs declarations, finding the right 10-digit HTS codes, and paying duties for every single small shipment. The administrative burden alone will be huge, and the risk of mistakes, shipping delays, and penalties is now a constant threat. Third, this completely disrupts your supply chain. If you rely on drop shipping or have overseas partners sending products directly to your U.S. customers, that entire model just became way more expensive and unpredictable. The cost-effectiveness of shipping single items from overseas has been turned on its head. And finally, this is a major threat to your customer experience. If you're not prepared, your customers could get hit with unexpected charges when their package arrives. Nothing destroys trust faster than that kind of sticker shock, leading to angry customers, refused packages, and a wave of chargebacks. If any of this has you worried about your business's future, take a second to subscribe and hit that notification bell. We're committed to breaking down these complex trade changes as they happen, so you can stay informed and ahead of the chaos. The solution. How to adapt and stay profitable. This is a huge challenge, but it's absolutely manageable if you act now. A wait-and-see approach is not a winning strategy here. Here are the critical moves you need to be making immediately. First, you have to reevaluate your pricing. You need to calculate the new total landed cost for every single product. That means adding in all the new duties and fees, and then adjust your prices to protect your margins. Second, it's time to fix your checkout process. You need to start collecting all duties and taxes at the moment of purchase. This is called Delivered Duty Paid, or DDP. It gives your customers full transparency, prevents any nasty surprises on their doorstep, and actually helps streamline the delivery. Third, you need to rethink your supply chain. This could mean shifting to US-based fulfillment centers and importing your inventory in bigger bulk shipments to minimize the per-item duty costs. It might also be the perfect time to diversify your sourcing and not be so reliant on one country. And finally, you have to embrace automation. Trying to manually handle this new level of customs paperwork is not scalable, and is a recipe for disaster. Look into platforms and software that can give you real-time landed cost calculations, automate customs forms, and ensure you're using the right tariff codes. These tools will be lifesavers. The end of the day Minimis exemption is a defining moment for e-commerce. The old way of doing business is over, and staying successful means making rapid changes to your pricing, logistics, and compliance. Yes, this is a disruptive shift, but by updating your pricing, moving to a DDP model, rethinking your supply chain, and using automation, you can navigate this new reality. This isn't just about survival. It's a chance to build a more resilient, transparent, and ultimately stronger business. So what's the first change you're planning to make? Let's talk strategy in the comments below. We can all navigate this together.